And in the end, what we're all waiting for is this little puppy. The banana zone. The banana zone has started. And we barely started. And you freaking out. This stupid, oh my God, it's going to correct 20%. Look at Raoul's chart of liquidity. That's this. If you can see it, in 2017. That's this in 2021. In 2013, we didn't even get that. We got sideways. So if we get a bit of a correction here, does it make any difference? Or you're better off just going outside, touching grass, spending time with your family over Christmas, drinking a little too much Bollinger Rosé, learning how to toast your own snacks. Yeah. Everything else is just fucking nuts. In the end, we're here for one thing, and one thing only. I'm trying to help you understand that you can unfuck your future with a banana. All you have to do is not fuck this up.
BitcoinZella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to BitcoinZella today and enjoy the new edge. In this video, Raoul Pal discusses culture, crypto, the banana zone, the everything code, lifestyle chips, and our big picture outlook at Real Vision.
The Bitcoin cross has been a beautiful pattern where this is a little bit out of date, it's pulled back a tad, but it's still the same. It's like, this is a fucking wedge pattern. Now, does it break to new all-time highs? I kind of think it might do, but even if it doesn't, it's big range, big sloppy range. It means that ETH is at the low end of its range and it'll probably get back to the high end of its range and it remains stable in its relationship versus Bitcoin. I think that is to come, and that's driven by the business cycle driving risk-taking across assets. But when we come into that, the business cycle going up is the key trigger for altcoin season. And why is that? Again, what we need is more disposable income to invest. And what we all do is we want to go out the risk curves and make as much money as possible in the shortest period of time. That is the world we live in because we are so fucked. We're so fucked because of how high housing prices are, the cost of goods and food, how restaurants. I was in New York City. It was $330 on my own for dinner at a fancy-ish French restaurant, not like a 3-star Michelin. It's insane out there. So we have to make a lot of money. I get it. I get that things are a lot more expensive for many of us, or for all of us. And the only way of getting ahead is speculating. I get it. So I want to help you speculate intelligently. And altcoin season is there. That doesn't mean go way out the risk curve. But here's the total market cap of crypto, excluding the top 10. So this is really alts. It does this every time. It has this consolidation wedge pattern, breakout higher. We've just started breaking out. So have patience, hold on. And, it'll also get rid of many of our sins, the stupid shit you've got in your portfolio. I think it will help with that too. So that lies ahead.
Bitcoin faces a tough battle for support after a macro scare stopped the bull market in its tracks. Bitcoin price losses have passed $12,000 in 2 days, but crypto traders and analysts are now lining up even lower targets. Bitcoin panicked both retail and institutional investors with its drop to $96,000 on December 19. Combined crypto liquidations in the 24 hours to the time of writing on December 20 total nearly $900 million, per data from monitoring resource CoinGlass. Figures from UK-based investment firm Farsight Investors show that the U.S. spot Bitcoin exchange-traded funds saw their biggest net outflows on record at $679 million. While the flush was in some ways cathartic, helping to remove excessive speculation, longtime market participants fear that worse is still to come. Among them is ex-commentator Bitquant, known for his bullish long-term outlook on Bitcoin and frequently calling for $95,000 before the market broke old all-time highs set in March this year. In his latest posts, Bitcoin warned that BTC is still due a deeper bottom, and that the dive to $90,000 seen earlier this month was not it. Sorry, but no, $90,000 was not the dip, he told another user, asking about where the market could reverse. A chart originally uploaded on December 10 used Elliott wave theory to project a possible BTC price downside to the mid-$80,000 range next. For those not planning to buy the next dip, I recommend stepping away from the charts and enjoying life until the spaceship to the moon is refueled. Part of the accompanying commentary said, even lower targets come from on-chain data platform WhaleMap. Analyzing areas of major accumulation by large volume investors after the latest drop, the WhaleMap team flagged an area of interest 30% below current spot prices. On-chain volume profile is showing a massive accumulation of Bitcoin at 6067, and another new accumulation range forming at current prices, it wrote on X. So for long-term HO dealers out there, risk-reward is well-defined on the macro scale. No go below 60x anytime soon.
The Bitcoin, this ridiculously over-colourful chart that Julian puts together, if you've got colour blindness, this is utterly useless for you. But basically all it's saying is usually the full pattern is very strong. The only reason the full pattern was not strong in 2021, and this is really important, I'm going to say this again, 2021 is not the roadmap. What happened in 2021, because of the violence of the downside in 2020, the upside was equally violent in the business cycle. And the ISM peaked in March of 2021. Right now, we're still below 50. There is no fucking chance the business cycle peaks. And none of our indicators suggest anything that this crypto market is anywhere near overbought. This is our Z-score indicator, whatever the fuck that means. It's Julian Bittle, he's smarter than me. Well, he thinks he is, because he can use long words and things like Z-scores, which I don't really know. But anyway, basically we're not overbought at all. We're nowhere near any of this. Our GMI cycle top indicator, again, you do get this in Real Vision Plus as part of the MIT tool occasionally, and also in Pro Macro. We're nowhere there. We're nowhere there. So we are in this perfect position where we just keep following this roadmap. This is all I need. This is all anybody needs. You don't need any of the rest of the charts. You don't even need to log on to Twitter. You don't need to do anything, but just use this. Use this one chart of Bitcoin in its log regression channel and suggest it probably goes to 2 standard deviations overbought. What is that? Well, that's kind of north of 500,000. So maybe it gets to 1 standard deviation. That's about 300,000. That looks pretty reasonable to me. That's what every fucking NASDAQ stock has done since 2012. So it's not like some special magic property of Bitcoin. No, it's Metcalfe's law. Amazon has done this. Microsoft has done this. Apple has done this. Tesla has done this. Meta has done this. It's all the same. So I'm not asking a lot here. I'm just saying it just continued to be adopted as a technology and everything continues to go. And in the end, what we're all waiting for is this little puppy. The banana zone. The banana zone has started. And we barely started. And you freaking out. This stupid, oh my God, it's going to correct 20%. Look at Raoul's chart of liquidity. That's this. If you can see it, in 2017. That's this in 2021. In 2013, we didn't even get that. We got sideways. So if we get a bit of a correction here, does it make any difference? Or you're better off just going outside, touching grass, spending time with your family over Christmas, drinking a little too much Bollinger Rosé, learning how to toast your own snacks. Yeah. Everything else is just fucking nuts. In the end, we're here for one thing, and one thing only. I'm trying to help you understand You can unfuck your future with a banana. All you have to do is not fuck this up.
Shifts in U.S. macro policy have served to cut short a broad risk asset rally, which observers felt was increasingly irrational. The Federal Reserve sparked the reversal by reducing its forecast pace of interest rate cuts for 2025 amid resurgent inflation markers. While it is easy to blame the sell-off on the Fed's hawkish cut, we believe the root cause of the morning's crash to be market's overly bullish positioning. Trading firm QCP Capital summarized in its latest bulletin to Telegram channel subscribers. Since the election, risk assets have enjoyed an impressive one-sided run, leaving the market extremely vulnerable to any shocks. BTC traded at around $97,000 at the time of writing on December 20, per data from TradingView, flat versus the daily open. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.